Welcome everybody to the earnings call for EliteDrone Dynamics. My name is Suyash, and I will let the rest of my partners introduce themselves.
How's it going? I'm Connor.
Hi, I'm Emily.
I am Mimi.
So moving on to our strategic vision, it is elevating visions, democratizing excellence, pioneering affordable innovation in imaging technology. Our strategic vision is able to establish ourselves as the unrivaled leader in the imaging technology industry, catering to our diverse clientele. And in order to do this, we have a two-pronged approach. We have our AC camera, which follows low-cost differentiation, and our goal with this product is to offer a great product with lower price than our competitors. With our UAV drone, we are going towards focus differentiation, where we create an industry-leading product in quality, but also charge accordingly for that leading product, while continuing to innovate every year. So just a quick look at our performance deviation. The metrics that we are focusing on are market share and PQ rating. And when we look at year 11 actual versus expected, we had a positive deviation on earnings per share and return on equity. And because of those two things being true, we also had a positive deviation on stock price. Our credit rating is matching expectations. Our image rating is slightly below, but we don't see that being a worry because of our year 12 expectations, which we'll talk about a little bit later. And I will pass it over to Connor for analyzing.
Thank you, Suyash. Yeah, so when we're looking at why our outcomes varied from what was expected from year 11, we can kind of touch on EPS. So we're continuing to repurchase some of our shares to get back to our shareholders. We also believe our stock price is undervalued compared to what our company is worth. We also are focusing our marketing efforts more intently and our retailer support, which is increasing our revenue and demand. Going on to our production costs for UAV drones, they're higher than the industry average, but we're able to charge a premium due to our higher quality. And by quality, we're referring to product enhancements and increasing all around aspects that give our customers a better experience with their drones. So just looking at our expected returns for year 12, we see that EPS is around $8.50. Our return on equity is 42.5%. Our credit rating is A, and our image rating is 77. And we will touch on that in the next slide about why that is our expected outcome and why we expect to beat that. So our approaches to realize these projections and even beat them come from a wide variety of different, areas within our company. Specifically for the AC camera, we're going to adjust prices geographically to cut competitors while retaining that higher PQ rating. We think in certain geographical areas, we might not be monopolizing on what we could with the higher prices compared to our competitors. And due to our cost information strategy, we want to get those lower prices in those regions to be able to provide the lowest costs at the lowest cost for us as well. We also want to extend our sales promotions in regions with lower demand. We think that'll spark some demand in those areas and increase our net income by increasing that demand as well. So we're also going to continue to increase R&D and marketing budget to meet the industry average. We are a bit low that right now, and even though we do have a cost differentiation strategy, we do want to reflect our product in a great manner and have a quality product and good features for our customers. Going on to our actionable strategy for UAV drones, we're going to cut costs back slightly on the R&D. We're about 70% above the industry average for UAV drones. We believe that is marginally higher than the industry average. So if we can cut back on that, we do believe that we'll be able to save some costs and reallocate them somewhere else. We're also going to cut price to spark demand in low demand regions. We do believe that cutting this price will also give us a higher demand and also increase that net income to meet those EPS goals. We're going to lower our marketing costs as well and lower operating margin regions to increase that ROI. We're not seeing the metrics we would like to on our return on investments for those marketing strategies we're undergoing right now. So we're going to alter that a bit and able to get our ROI to the highest point that makes sense for our companies and our shareholders. So company-wide actions, we're going to buy back shares because we do still believe our stock price is undervalued, and we do believe we supply great products at a great price. So we're going to go ahead and follow through with that continually. We're also going to increase our dividends by 5 cents in the future. We believe in giving back to our shareholders, and this is a great way to do so. Additionally, we're going to continue following our motto and vision, and the product will prove itself. We really think focusing on the 2 strategies we have set in stone will lead our company in the right direction, and we want to hold true to those values. So our reasoning for why this will help us obtain those metrics that we have set for year 12, adjusting those AC cameras, our AC camera strategies to reflect the lowest cost and increased product enhancements are going to appeal to that cost differentiation strategy and maintain that high PQ rating. Also, cutting that R&D and cost in low demand regions is going to give us cushion room and spark demand in other regions by using different metrics to be able to reach those metrics. So thank you. And are there any questions?